and 72% of the time the market goes up. And the answer came to me. And that's where I developed my chart. The answer came to me is because, just like Caterpillar, when they pull their money out, you get out. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. I just nuts.
With your host, Phil Grande.
Bye. Good afternoon and welcome to my podcast. Lots to talk about. Everybody's talking first about, the oil, but they're also worried about stagflation and inflation, and actually stagflation and recession. Play the cuts.
I think that everything we're looking at right now points to a classic stagflationary market environment.
This economy is very fragile. It's at risk. Recession odds are very high.
And then we have following that.
This is not yet an economy that we think is at risk of recession.
We're really much in a Goldilocks economy.
So you can't believe a word these jibber-jabbers say on TV. They lie for their own benefit. But we don't need them to tell the truth because we get clear signals. Just like we get a clear signal if institutional money is going to start coming in the market. Like, for example, right now everyone's excited about we're having a rally again. But it's not going to last because the institutions are not putting money in. They're staying in the safety of bonds. So my point is they can lie, they can fabricate, but what you can't do is fool the IWM. That's really important. And the yields. The yields tell you the truth. What's going to happen with the economy, what's going to happen with the market, especially if it's going to get nailed, it's going to get bad. And IWM confirms it. So by looking at IWM and the yields, we always know what the direction the market's going to go. We're not surprised. Now, let's talk about stagflation. It's rearing its ugly head again. There's no question about that. Because we got weak growth, really weak growth. And we got inflation because of oil. So, and we got, remember, the yields have been rising only just recently because oil came down. We had a couple of days that the yields are coming back down a little, but that's going to be short-lived, I believe. Now, recessions is a different kind of warning, okay? What we look for is yields stop, the yields will drop first, is what I'm trying to say, okay? And when yields drop, that means growth slows. IWM drops second, that means the economy's cracking. So we know that. We have those clear signals. Stagflation warning is when inflation is rising and growth is falling. And the market is saying and shouting stagflation. Stagflation is a horrible thing because stagflation is hard to get out of. It took 10 years the last time, between 1972 and 82, I think it was. Because no matter what you do, if you try to fix the one problem, growth, then you got the other problems start falling apart. So no matter what you do, it doesn't work. That's why it took 10 years to fix it. Because you got two problems. Now you think you could go in and fix both problems at the same time. You can't do it. It doesn't work that way. So yes, to answer everybody's questions, all the emails, yes, we have, stagflation is rearing its ugly head. There's no question about it. We're seeing the signs. Growth is slowing. And also, too, that your bonds, okay, would be, again, looking different right now than they are. And so, again, we got also the IWM this week. We got XLI. That's mixed. We got housing, XHB. That's not conforming with strength. We haven't got that. I mean, just a ton of things to show that we definitely have a problem. So we'll keep our eyes on that for you. So let's get to what's been going on this week, the oil, what's going to happen, what's going to go on with this war and all that, and how's everything's going to be affected. That's the big thing we got to look at. And the big problem we got right now okay, is we have, as I said, we have our team over there negotiating. That's the problem, and we have a good team, but we're dealing with the wrong folks. In other words, what's happening is the people that we're dealing with over there, the president, the civilian president, and two other groups, they have no authority. Or let's put it this way, they have authority to sign contracts, but it doesn't mean anything. Why? Because even though they got the authority to sign contracts, they have to have the Revolutionary Army okay it. See, the way the system worked, when you had Khomeini, the religious guy, I mean, he held control over all the different players and all the militias, Syria, Lebanon. I mean, and where did he get the control? Because he controlled the army, the Revolutionary Guard. And when you control the Revolutionary Guard, and remember, he got into office in what, 1980, I think it was 1989. And he had that army, the Revolutionary Guard, they adored this guy. They believed in him, and they would only answer to him. Now, there's another guy under him, Soleimani, and he also was very powerful. He was the second guy. And all the different militias and the Revolutionary Guard would all, I mean, they would do, they would do anything to please these two guys, especially Khomeini. Now, they both got killed. So what happened? Well, everything changed, because now, with Khomeini died, and the other character died, all of those different, fractions, all those different militias, Syria, Lebanon, all those different, like 7 of them, they had no leader anymore. They split. They all split. In the Revolutionary Guard, they had nobody to answer to. They split. But the Guard is still feared. And if you look at what goes on, you can take the president of Iran, which is the civilian president. You can take the negotiating team for Iran. You can take all the diplomats for Iran, and they can sign a contract. How it works over there. They can sign a contract, legal. But what they can't do is enforce it. There's only one group can enforce it. That's the Guard. Now, if the Guard decides not to enforce it, then no matter what they signed is worthless. So what happened in this case, they made a deal, the civilian president with the diplomats, with our negotiating team, that they would immediately, if Trump stopped the war, they would open up the canal, the strait, the choke point, and they would allow per day 40 oil tankers to go through. That's on average a day, 40. They agreed to all that. Well, what happened? In the last 2 days, we only have 3 oil tankers out of the 40 they allowed to go through. Well, I thought we had a deal. We had a deal with the president of the country. Doesn't mean anything. Now, he kept his deal. But the Revolutionary Guard, they're not going to enforce it. So that's why you only got 3 oil tankers through. The Revolutionary Guard is more dangerous than ever because it's on its own. And you have all these different generals in the Revolutionary Guard. And everyone's scared of them. And just, for example, let's take the president, the civilian president, or the diplomats. They're more afraid of the generals that now run the Revolutionary Guard who don't answer to anyone. They certainly don't answer to Khomeini's son. He's just a ceremonial leader now. He has no power. He can't order anybody around. He doesn't control the army. The generals do. So the problem is that when we made the deal and Trump said, okay, I'm going to stop the fire, I'm going to stop bombing, let's push those ships through every day. The diplomats agreed, the president agreed to Iran. Didn't work. Why? Because when they called the generals over at the army, the revolutionary, they said, no, we're not going to do that. In fact, what they did, they ordered their militias, Syria, Lebanon, there's about 5 of them, to go over and close that strait. Do not let American oil tankers through. So here we are, Friday, no oil tankers, but 3 out of 40, and yet we're still negotiating. That's the big problem right there. There's no one the only people that can make a deal are the Revolutionary Guard. They're it, and they call themselves the IRGC. If the Trump can't make a deal with them, there's no deal. Now, if Trump makes a deal and says, well, I did make a deal with the president of Iran and their diplomats, so we're fine now, we're not going to be fine. I don't think he would do that to us, okay? Because he has no choice now. He has to go in and take out the whole regime and set somebody up in there, get elections. Because if he leaves and tells us he signed a deal with the president of the country, and they're going to take the uranium and we're going to inspect it every 3 months for the UN or whatever group, we're going to be no different than Obama, or he's not going to be any different than Obama or any of the presidents. It's not going to work. So he has no choice. And that's why it's interesting how everybody, now the oil came down the other day, you have all the people who jump in and buy on dips. Boy, they're buying oil like crazy. And where they really screwed up buying oil, they saw volume go up. Well, the volume was going up because the institutions were coming in, but they weren't buying oil to build an oil base in their portfolio. Their computers come in, and every time there's a little pop, they sell into it. They buy and sell like in a second, 2 seconds, like 200, 500 contracts. It's amazing, these computers. They didn't come in and start buying. What they're doing is every little pop, if it's 0.4%, that's a big deal for them. If they can make 0.4% in a trade, and they put thousands and thousands of trades through in seconds, that's a big, big winner for them. Now, a retail investor has to get 2% to 5% to make any money because they buy these small little shares. But, so yesterday when we saw this volume coming in, it was the institutions, but they weren't doing what we want them to do, to shift their money out of the bond market into the stock market. All they're doing is front running their computers and making a fortune on all these little tiny pops. So all these people who jumped in and bought oil the other day thinking it's a good deal, they're going to have a real problem. They're going to give all that back. So we got, if you're trading stocks right now, the stocks that we've been trading, and we've been doing terrific, is we went after the small stocks, the small banks. And we did terrific with these stocks because we were catching everyone at a sweet spot. Here, I'll show you my computer. We had a great time this week. We were making a lot of money this week with these little stocks. And we had, here, just give you an idea of a couple here. Let's see. We had, here, USB, for example. We caught it right in the sweet spot, and my Pro 2 turned green. See it? That was a buy signal. We made money on BK. Look at this. We caught the sweet spot, and it went from red to green, gave us a buy signal. We did a lot of trades like that this week. But today, we're going to go in now. I told my members, take a lot of the profits, keep a little bit of shares on, put a stop in, but take a lot of your profits. So what you have to do, you have to go out and find the groups that are working well. And what's happening is everybody thought, okay, well, the yields were coming down. Now everybody ran and they started to buy the tech stocks. That's the worst thing you could do. Okay, yeah, they like lower yields. We get that. But if you're in there buying tech stocks, unless you're buying sweet spots like this, and you're making trades and sell into those, you're going to get hurt. You got to know what you're doing in this market. And obviously we do. You got to know how to go long and short. So we had a good week this week, but you got to be careful. All right? Have a good weekend, and we'll see you on the charts. PhilsGang.com.
Are you nuts?